Georgia offers a research and development tax credit to companies developing new products and services in Georgia. Georgia adopts the federal definition of qualified research expenses. The R&D project must follow the federal guidelines for being technology-oriented, and while not mandatory, Georgia does expect to see a substantial amount of costs related to experimentation. Since much of the work done on a federal return applies to the Georgia return, it makes sense to claim both credits. Normal commercial outsourced contract research expenses are subject to a 65% limit. Research expenses incurred through a university are subject to a 75% limit. The credit may be claimed by both C corporations and flow-through entities. Current year claims are submitted with the current year return. Amended claims are submitted in accordance with standard amending rules. The documentation requirements for the Georgia credit follow the same guidelines as for the federal return. The taxpayer must be able to put their hands on receipts, key documents, and financial statements if and when required to support expenses claimed. The following items do not qualify for the credit: general and administrative payroll, supplies not involved directly in the R&D, depreciable property and land, advertising, marketing, utilities, small tools, and shipping costs. To qualify for the Georgia Research and Development Tax Credit, the taxpayer must have acquired qualified research expenses in Georgia in a taxable year exceeding a base amount and have claimed and received a federal research tax credit for that taxable year. As stated in the Georgia State Tax Code, a base amount means the product of a business enterprise's Georgia gross receipts in the current taxable year and the average of the ratios of its aggregate qualified research expenses to Georgia gross receipts for the preceding 3 taxable years, or 0.300, whichever is less. Provided, however, that a business enterprise need not have a positive taxable net income for the preceding 3 taxable years in order to claim the credit provided. The credit is claimed on Georgia Form IT-RD. The credit rate is 10% of the excess over the base amount and cannot exceed 50% of the tax liability. Any unused credit can be carried forward for 10 years. Starting in 2013, companies can use the credit against their payroll tax if the company is in net operating losses. Georgia requires that the taxpayer file an application with the Georgia Department of Revenue at least 30 days before filing their company's state income tax return, including extensions.